Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes or perhaps longer, we're going to be doing an update for Bitcoin. Now, it's been 11 days according to YouTube since I last updated Bitcoin, and I've had a lot of people asking me when's the next update, when are we next going to cover Bitcoin, and today's the day. Now, I'm sorry it's been a bit of a wait, guys, but at the end of the day, nothing has happened, to be absolutely honest. Not in the time frames that I concern myself with anyway. And I've still got a couple of alerts on the chart here waiting for this range we're in to break down. There are multiple ways to interpret this. I have a primary and an alternate way of looking at it. Various counts. We can go over those today. And if you're new to the channel, it's an opportunity for you to learn what I'm thinking, essentially. And yeah, that's basically what we're going to be doing. Just having a bit of a recap. Now, before we get into that though, I have a quick message for you. Do you want to learn Elliott wave theory? Well, if so, head on over to the Green Star Trading Patreon now and sign up to either Tier 2 or Tier 3, where you will unlock this 11-part series called An Introduction to Elliott wave theory. This is a playlist you will be able to access via a link on the Patreon, also available on the Discord. It will teach you Elliott wave theory from scratch, everything you need to know in a comprehensive but easy to follow way. I also have another playlist that I've just created called Trading, and this covers my technical approach to trading and gathers together several of the videos I created over the last year or so's worth of content for the Patreon, and helps teach how to apply what I call the standard trade setup method and application, plus also how to move a stop during a trade over time, trading psychology and rules, risk management, and the golden corner and STS. This is an ongoing series and I'll add to it over time. I also have another series called My Chart. This is another ongoing series, only 4 episodes long currently, but probably going to end up well over a dozen. If you use TradingView like I do, this will teach you all the handy tools and tips of how to use it and how to set up all of your technical analysis tools and indicators in the exact same way I do. So why not head over to the Green Star Trading Patreon now by clicking on the link in the description box below and signing up to either Tier 2 or Tier 3 to unlock those playlists. You also get access to weekly live streams which can go on for hours, access to the public Discord in Tier 2, and if you join Tier 3 you get all of the aforementioned things, including the monthly dividend calendar and my stock rating system. But if none of that appeals to you at all and you just want to support what I'm doing on YouTube, that's great. You can join Tier 1 for £5 a month and still bag yourself an exclusive video each week. Thanks for listening, guys. We look forward to welcoming you aboard. Now let's get back to the video. Okay, welcome back, guys. So first things first, I think we should just switch the count off for a minute, back out of here, and talk about some basic technical analysis first. Okay, so I always like to talk about things as though you're new to the channel. I know this could be a bit frustrating for people who've been following the channel for a long time, so the video will be timestamped and you can skip this bit if you like. Essentially, we're talking about all of this sideways price move being a wave 4 before a final move up into a wave 5. And essentially the model we've been using for this is our long-term pitchfork, which has contained the price action incredibly well this whole time and continues to do so still. So that's what we're going to bring up now, which is our primary 1-2 pitchfork here. And essentially the count goes a little something like this. We have a 1 and a 2. We have a 3, you can put it here or you can put it here. Okay, and we have a 4, which is either done or not done yet. Right? 1, 2, 3, 4 or 4 before going off in a 5. And that is basically it in a nutshell. Now, as you can see here, we've had some extremely confluent technical price action going on here. So these levels have been respected considerably. As you can see, we've got a actual parallel channel running between the 223.6s here along the median line, perfectly bouncing along. You can see how on our way down we've stopped here at the 38.2, then we've fallen to the golden zone up to the 38.2, back to the golden zone, up to 38.2, back to the golden zone, up to the 50, back to the golden zone, up again, and this is the current channel we're in now. So we could do the exact same trick. We could go and get our little parallel channel, go along the 38.2, drag it along, drag it down to the 61.8, and as you can see, we're channeling up here at the moment. Great. Now you can see how we've also worked around the 23.6 as I just mentioned here, the median line as well, this 61.8, 61.8, 50 here, and stopping at the 61.8 here, all of this sideways action to come to this side, 61.8. And we've either bottomed and we have to try and get some kind of bullish count out of here, which looks bloody difficult at the moment because this is resembling a triangle and we can't have a triangle in a wave 2 ever. So that's the first problem for trying to get the count to conclude. There is still evidence though that it may well have done. So let's just come in now and talk about that before we move on. And then we'll talk about the primary count and some alternatives as well. But until we get out of this little range, which is represented by these two alerts I've got here on the right hand side, two orange dashed lines, these will go mental and start beeping at me if we break this price action. I'm not wasting time obsessing over the chart, looking at it all the time. I'm interested in where we're going next. Okay, and I'm not going to know for certain until either of these levels get broken. So that's what I'm focused on. So bear with me one moment while I have some of my coffee. There you go. Right, so the next thing I was going to talk about, my mind's just gone blank for a minute. We were talking about the pitchfork, weren't we? Ah, yes, that was it. The confluence folder. So stuff on the side of it being complete and having to try and force some kind of dodgy bullish count here at the lows, or perhaps some way of getting a higher low. I'm not quite sure yet. We have this parallel channel. Point to point to point to point. Very, very pretty. Right, that's nice. We have this 1-to-1 ratio. The length of this is the same as the length of this. We get a perfect 1-to-1 between these three pivots. Lovely. So that looks quite, pretty compelling as well. We get a perfect touch on the edge of a regression channel here at a 1-to-1 before bouncing out. Okay, clearing that downward trend. That's all groovy as well. And that is essentially, the cases for it having found support here. Now we also have, if we look at long-term support here on the exponential moving averages, this is an orange 60 and a green 250. We can see how this long-term base support and resistance level, which I'm going to show you now. Let's just turn off all this confluence. Bring up this base support resistance levels here. Support becomes resistance, okay, becomes support, becomes resistance. Then we have this level here, resistance, 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 support, 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 resistance. We also have the final level here as well, which is support, support, and kind of not really doing anything. But as you can see, it also coincides quite nicely with the 250 exponential moving average, which is this green line providing resistance here, providing support here, providing support here, and providing resistance around these two tops here. You can see that pretty clearly. So we're in this big sideways consolidation. There's multiple horizontal support and resistance levels, and the 250 exponential moving average, as you can see, is clearly playing a role, as well as the 60 exponential moving average here, support, here resistance, is also playing a role. Here support, you see, and here resistance, you could argue. So we're just waiting to do something decisive. We either want to come down here and get lower before getting a huge spike, right, break these levels, try and get everyone short, try and get everyone, messing their kegs, and then reverse it and hurt as many people as possible. Or we're going to do something which is just, teeth grinding for longer and longer, and we have a count for that as well. So there you go. Now if we just come out to the weekly time frame for a moment, and we look at these exponential moving averages, you can see how on the weekly time frame the 60 was operating as support very strongly, wick, 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 body, body, and now it's operating as resistance. So we've gone from support to resistance. So as you can see, these levels here, just as we've seen with the base support and resistance levels as well, with the extension we were looking at, with the parallel channel, la-di-da-di-da, getting above this and staying above it in an impulsive fashion is going to be bullish, at least for the short term. Hence why we've got this orange dashed line as an alert to let us know when that happens. As you can see, this base support here, which is at the edge of that parallel channel and that one-to-one relationship, this is also a significant support level, and this breaks down, we're going to be interested because that's bearish, at least for the short term. So there you go. So now let's bring up our technical indicators, which is our RSI and our MACD here. So as you can see, we have some pretty strong evidence that we're in a triangle consolidation currently. Okay, we have lower highs and higher lows in the RSI on the day time frame. We have lower highs and higher lows on the MACD as well. This is synonymous with a triangle pattern. So that puts a big dampener on the idea of this being any kind of 1 and 2, because a triangle should not be occurring in a wave 2, right? Can't happen. So although there is potential for a bullish count, this undermines it. It's more likely that this is corrective before heading lower, or this is corrective before heading higher and then coming back and then heading higher, and so on and so forth. So let's now get down to the counts and the various ways we can explain this. So firstly, the double combo complete, and let's just bring up our previous price data as well. So the way this one works, double combination, flat here, zigzag, which is our X wave, zigzag complete, 1 2 something 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 dark side, out we go. So I've got problems getting beyond the 1 2. All of this, that's all groovy. It's just getting down here into this patch. So let's just come down, zoom in, see what the problem is. Right. And it is a bit of a problem, to be absolutely honest. Let's come down to the 1 hour time frame. It was on course to try and talk you into it, and then it all started to go a bit tits up. So we've got a very dodgy impulse wave, which we've not been happy with since day one. An impulse down, which kind of looks like 5 waves. So I should say correction, sorry, zigzag down, which looks like an impulse, what I'm trying to say, excuse me. A, B, C. And then we get a 3 wave move, which could maybe be 5, another dodgy looking impulse, but it's more likely 3. And then we get 5, 3, 3, and a bit, and maybe another bit, and maybe another bit, and something else. I don't know. So it all kind of breaks down into a big mess at this point. And the beauty of going 1 2 1 2, let's go, hasn't happened. So this is seriously on the back burner now. It's still, if there is some way of getting through this, my hunch would be that that was 1 and this was not 2 down here, and we're going to do something like this to get a 2, but it has to come in prior to the bullish invalidation here at 32951 spot 89, otherwise it wouldn't be legal. You could argue for some kind of an extension with a move here, but then there doesn't seem to be any completion to it to get the 2. Maybe some kind of A, B, C like this. The whole thing stinks a little bit and isn't very convincing from a bullish perspective. So it's definitely not my primary at the moment. So let's zoom back out and have a look at what I find more compelling. And it's a real struggle to decide which one I should put ahead of the other at the moment. This is definitely going to be alternate count. So what I'm just going to do now is I'm just going to come in and relabel this. Alternate bullish. Okay, so the next one, double combo ZZ. Now this one is causing a little bit of, I wouldn't say controversy, but we've gone back and forth on this in the group a few times, trying to figure out whether, is that being locked? It has been locked. Whether it's legit to have a double zigzag inside of a Y wave. Now, my argument is, if you read Elliott wave principle and you go to the page about zigzags, there's a paragraph about how the zigzag family isn't just a single zigzag, but is also any combination of 2 zigzags or even 3 zigzags are still a zigzag. So, expecting a zigzag in a Y, can we expect a double zigzag in a Y? I guess that's open to interpretation. I would argue for it being possible. A, B, C, this gives us a flat attached to what is going to be a larger zigzag pattern. Okay, but a WXY double zigzag rather than a single ABC. Okay. In that case, the RSI and MACD is supporting the idea of this being a shorter term triangle. Right? It hasn't broken this high yet, this low yet, this high yet, this low yet. Still contracting, waiting for it to complete and then head lower. That would be what we'd be expecting in this count. If this count is correct, then the high here back at the A wave, because we could be extending some kind of three wave move, and we maybe may have preempted the position of a C. Now what I mean by that is we may have had A and B, but the C might not actually be in yet. It could be a longer, more drawn out wave. So the real cutoff point is back here at the top of the A wave. If we breached that, then this is not the triangle we thought it was. And let's just, what's that line? It's 458.50 exactly. 458.50 exactly. So let's just make it precise and lock it in place. There we go. Break this level, and this idea of it being an X-wave triangle is wrong. And this is why I've got my alert here, just to front run that level so it wakes me up when it beeps at me and I can start considering what's going on. Okay, hunky dory. So how this is playing out, I'm not going to obsess, because if it's a triangle, it's a sideways, time-wasting mess of zigzags and a potential complex in a C, D or E wave, or even a triangle within a triangle, and I'm just not going to get caught up in the minutiae detail trying to stress over that. It's just not worth it. Get above this level. This is an invalid idea of a triangle into an X heading us lower. That's no longer the case if we get above that level. Alright. Now the one that I'm starting to lean into, and I'm kind of really hoping for. Now, not because I didn't want to buy Bitcoin cheaper. I'd be fine with it going lower to buy Bitcoin cheaper, just because it gives some long-term clarity as to what the hell is going on. And that is this idea. We've got a triangle, but it's not a triangle within a triangle. Alright, it's a triangle within a B wave of an ABC zigzag of a D wave of a triangle. You get me? Right, so in this case, it's a bullish pattern. Now, why do I like this? The reason I like this is this low, which is supported by all the confluence we spoke about earlier, right, never gets broken again. It remains in place, which means basic technical analysis, simple confluence levels, all right, of one-to-one relationship, parallel channel, regression line touch, long-term movement, moving average, long-term base support, resistance touch, all these things, right, all help us support this low. And then this triangle maintains that low. So what we get is an A, an eventual A, B, C, D, E, into a B, into a C, taking us to a lower high. Alright, and then we get one more higher low in the E, and then off we go. Bob's your uncle. Now, I like this one, and if we get some kind of observable completed excuse me, triangle here, then a move above this exact same level means that the triangle has completed its 5-wave move of contracting pattern and is now heading higher for this D wave. These are the most likely counts, with the bullish 1-2. I can't figure it out because I don't think it is a 1-2 off a low. I think it's more likely a consolidatory pattern which is continuing to go sideways and annoy everyone. I find that kind of comforting though. Wave 4s are supposed to be like this. They're supposed to be long-winded, drawn out, frustrating processes which test participation via patience and time, rather than by violent price corrections such as we tend to see in a zigzag, which is more common in a wave 2, which tends to just scare the pants off people. Wave 4s tend to bore the pants off people, if you could bore someone's pants off of them. Either way, it tends to just tire you out. You know, and I think when you listen to bears and bulls, as impassioned as they can sometimes get regarding their views, everyone kind of just gets fed up in this scenario, and I feel that's definitely the theme lately. There's a lot of fed up people who just want it to do something. You know, the meme of the dude poking the stick at the other dude on the floor or whatever it is, and that's kind of the state we're in, and that's why it's been 11 days since I've updated you, because we're just waiting for this to bloody well do something, to get through one of these two levels and tell us what's happening. I'm not going to pick a favourite at the moment. These are probably my joint primaries. I think there's compelling argument for both. Okay, so I'm just going to say triangle primary. Oh yeah, that, I mean, I'm allowed to do whatever I want. It's my chart. So I'm going to have primary. Alright, and then what we'll do to differentiate is this one's the bearish pattern. Bearish pattern, bullish pattern, in between your sideways pattern. And there you go. And I think I'm leaning into either it being that or that rather than the bullish one too. So the last couple of counts we've got, which I'm not considering, they're just hanging around waiting to die, refusing to do so, is we've got this bullish count of this being 3 into 4 very quickly. I don't like that. And this into 1 into 2. This has the exact same problem of this therefore having to be 1 and 2, and this therefore having to make some kind of sense as a nesting 1 2, which it doesn't seem to look like at all. Okay, so this has the same problem, but for as long as this low holds, okay, which, well, it might as well add this to this chart. I know I've got it somewhere else already. 32,950 it makes out exactly. Right, for as long as that low holds, this count is still technically possible, but it has to have some kind of valid subway structure off of the low which can be counted impulsively, which we've already discussed is pretty dodgy. Okay, so that's that. And let's put this one in that count there. Right, what else have we got here? What's this target zone thing? Oh yeah, I remember. That was back when we... This is all the way back once we'd had this move and this move. We were saying this is the target areas we're going to bottom in. And we got into it, but we never came much deeper. So we could still come deeper. Okay, and we've got counts to accommodate that. We've just mentioned one, which was the double combo lower like that. It could still bring us further into that target zone. Base support resistance we've discussed. Levels. Bullish invalidation, that's the idea of that being 1 and 2. And then finally support, and we've got previous all-time high at 20k down here, and whoops daisy, let's lock all that in place please, and an invalidation point down here as well. Right, and that's the top of the wave 1, so the wave 4 would not be expected to go below that. Okay, and that basically sums everything up as I see it at the moment. Now let's just have another quick look at, in log scale for a moment, that long-term pitchfork, which I'm very fond of. And now let's have a look at our triangle pattern inside of this triangle primary. Okay, now as you can see, there's plenty of room in here to start touching these levels again. Right, the 61.8 is holding at the moment, so maybe you could even argue for a steeper triangle. And we're going to move within the bounds of this 61.8 area here until we get a completion. That's possible, right? Maybe we break it and we do it and we come down a little bit lower, because as you can see, we've broken it by wicking through it on a couple of occasions before. This was a wick below it, and this was quite a deep wick below it. So another wick through it, that could be perfectly normal. Then come back and play with it again. Then wick through it again. Then move up to the 38.2 to get this D. What I'm getting at is long term, whether we come down or in a more violent move from here, or whether we continue up to come down, the natural finishing position feels like the edge of the pitchfork. Okay, doesn't have to be. We could come down to the 89 or somewhere in between, and then we could come up. But it just feels like the edge of the pitchfork would be a natural place to do it, and that could give us time enough to get a B wave ABC in here for our D before coming down to our E, before finally completing and then rushing for this median line, right? Which is about 120 to 140,000 depending on how long it takes to get up a median line touch to complete the larger pattern. That looks really nice to me, that does. I mean, this is all just conjecture. I'm looking at it from how I'd like it to play out if it was beautiful, if it was perfect. And there's no way of knowing it's going to play out like that until we start to see some of these levels break. So let's now remove that for a moment and remove that count again and just remind ourselves of how that would look. Here's the let's use the drawing tool. Here's the 1, here's the 2 at the edge of the pitchfork. Here's the 3 around the top of the golden zone. Here's the 4 at the edge of the pitchfork. And we've just done a really nice, simple move like that. With 5 waves up. 5th is up here. Now it could go to the top of the pitchfork, but that's a long way up. But it's still possible. Okay? There are more bullish long-term candles out there. 1, 2, 1, 2, 1, 2. All of that depends on this being 1, 2, and we've already discussed the problem of it not looking like that. I'm not saying it couldn't be, but it just doesn't feel like it is. Okay, so I'm leaning into the idea that it's a triangle, or we're going to come down lower. The final count, which I should touch on here, is the idea that we've had a cycle wave top already complete. Okay, then where do I want to put this pattern here? I'll put it in the triangle primary and get it out of the way. This is the idea that we topped in the 5th wave. Now, I'm not going to go over it again because I've gone over it so many times. I've never been happy with this being 3, 4, 5. This feels like 3 waves to me rather than 5, but I've got it. It is possible to label it as 5. I've never liked it because how weak the wave 5 is. Now, if we go and look at previous bull market tops, 2017, 2015, or 14, I think it was. Wave 5 does not look like some tiny little trundling move that just takes us clear of wave 3. It's a blow off move. Doesn't have to be again. Excuse me, I'm just saying it would be normal for it to be so. So I've always found that suspicious. Now if that's the case, and it was topped out here, then we've only just started our correction with our first initial move down. We will then get the same 3-wave triangle into an X, and then we get a much more aggressive zigzag. Okay, all of this becomes cycle wave top into a 2, a much bigger move. Not my favourite, not by a long shot. I'm only keeping it alive in case everything else I believe in or think is possible breaks down. You must always have some kind of backup plan. Alright then guys, that is Bitcoin. I am really hoping we get some kind of move here. You know, if we can just get a completed triangle and a zigzag out of it, hunky dory. If we come breaking down through this level, that's fine as well. We get cheaper Bitcoin in the future. Alright, and we get a chance to make sense of what's going on. But in the meantime, I'm thinking primary triangle or primary double combo, alternate bullish count, but I'm struggling trying to get it to work. I think if I had to side with something, just because of the way it plays with this rising trend line, that 61.8% golden ratio level we see, the parallel channel, the 1-to-1, everything like that, it just feels better as a time wasting triangle going sideways. But if I am going to give it lead position as my primary, it's marginal over the other. Alright then guys, that is it for Bitcoin. Now a quick announcement before I leave. I am becoming a father for the second time in my life within the next 20 days. Our due date is, so my life's going to get pretty hectic, pretty busy, and After those first few weeks, I'm going to be getting things back on track and getting into a routine, but don't expect to hear from me as frequently as you normally would. My priority, of course, will always be family. My next priority so far as business will be looking after those people who pay me, the Patreons, and providing my pledges and achieving my pledges to those on a weekly basis, and that's what I will be prioritizing. So next week I'm going to try and come out of the gates running. We're going to look at some other cryptos, probably have a look at Ethereum, maybe have a look at XRP or something like that. And I'm still going to get my stock market video out and my gold and silver video out as well. I know I've been a bit remiss, but as always, if you are a Patreon subscriber, you will still get the weekly live stream. If you want to cover certain things on the live stream, put them in the live stream analysis channel on the Discord, and we'll discuss those in next week's live stream, probably Thursday again next week. Alright guys, take care of yourselves, and if you are new to the channel and you like what you're seeing, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below, and if you're not following me on Twitter yet, please do so, as I always post when I upload a new video. If you're interested in joining the Patreon, there's a link also in the description box below. And as always, big thank you to all of my Patrons. Take care of yourselves, and I'll be back with you soon. All the best. Bye bye.